Cipher Mining stock took a bit of a beating on Friday, falling $1.02 or 5.67% to close at $16.97 per share. It wasn't just Cipher that was down, the broader market stumbled as well, with renewed trade war fears rattling investors and sparking a general risk-off mood. But what's really going on here? Is this just a normal pullback after a strong run, or something deeper? And what should investors watch heading into next week? Let's unpack Friday's action and take a balanced look at what it means for Cipher Mining's story going forward. After a week of big moves to the upside, today's pullback might have been inevitable. Stocks that rally as hard as Cipher did earlier in the week almost always see some give back, especially when external events shake market sentiment. On Monday and Tuesday, Cipher climbed sharply. Wednesday saw a massive 11% surge after the company's operational update confirmed strong fundamentals and real progress on its AI and HPC pivot. Even Thursday, the stock held up remarkably well, closing just under $18 and signaling that momentum was still intact. But Friday changed the tone. Global headlines around renewed trade tensions between the United States and China sent shockwaves through the markets. Reports suggested that new tariffs were back on the table, reigniting fears of a slowdown in global trade and manufacturing. Risk assets, especially tech and growth stocks, were hit the hardest. And because Cipher sits in that high beta category, part AI infrastructure, part crypto exposure, it was an easy target for traders looking to reduce risk heading into the weekend. This is an important point to remember. Friday's drop wasn't really about Cipher's fundamentals. It was more about sentiment and macro positioning. When headlines about trade wars, tariffs, and global tensions start hitting the wires, algorithms and large funds automatically de-risk their portfolios. They rotate out of high volatility stocks and into safer plays. In that kind of environment, it doesn't matter how strong your latest operational update was, everything gets caught in the downdraft. To put it in perspective, the S&P 500 and NASDAQ both fell, with the tech-heavy sectors leading the declines. Bitcoin also dipped slightly, which added some extra pressure on crypto-related equities. The move in Cipher's stock was sharper because it had outperformed earlier in the week. After such a strong run, some investors likely took the opportunity to lock in profits. That's a normal part of market behavior. When a stock gains 20 or 30% in a short span, traders often sell into strength, especially when macro conditions suddenly turn negative. The good news is that there was no negative company-specific news behind the sell-off. Cipher didn't release any filings, guidance cuts, or operational warnings. The last major update from the company remains the September operational report, which showed significant progress. Cipher mined 251 Bitcoin during the month, including 19 from joint venture sites, while generating an additional 7 Bitcoin equivalent from power sales. It sold 158 Bitcoin and finished the month with around 1,500 Bitcoin held in treasury, a strong position that gives it flexibility going forward. On the infrastructure side, Cipher now operates with an impressive 23.6 exahash per second of active hash rate across its fleet of more than 114,000 mining rigs, running at an efficiency of 16.8 joules per terahash. That's a world-class efficiency figure, placing it among the most competitive players in the mining industry. The company also confirmed that Phase 1 of its Black Pearl facility is now fully operational, delivering 10.1 exahash of self-mining capacity, while construction continues at the Barber Lake site, the key location for its high-performance computing and AI hosting initiatives. So while the stock may have pulled back, the business itself continues to move forward at full speed. Now, it's worth thinking about why that matters so much. Cipher isn't being valued purely on Bitcoin mining anymore. The company's long-term story is about transformation, leveraging its energy infrastructure, mining efficiency, and data center capacity to expand into high-performance computing and AI hosting. This is the same narrative that caught investors' attention earlier this year when Cipher announced its massive partnership with Google and FluidStack, a 10-year, $3 billion AI hosting deal, with Google providing a $1.4 billion lease backstop and securing warrants for roughly 5.4% of Cipher's equity. That partnership signaled something major, that Cipher has the infrastructure quality and reliability to support enterprise-scale computing workloads. The AI hosting market is booming, with demand for power, cooling, and computational capacity soaring as companies race to train and deploy large models. Cipher's pivot positions it to capture some of that demand, while its mining operations provide steady cash flow and energy optimization. None of that changed because of today's market dip. If anything, days like this are a reminder that sentiment can swing faster than fundamentals. Cipher's management team continues to execute, the AI hosting build-out remains on track, and Google's involvement provides validation and financial stability that most peers simply don't have. So, what should investors make of Friday's drop? In short, it's likely a mix of macro pressure, short-term profit-taking, and momentum cooling, not a structural change in the company's outlook. From a technical perspective, the pullback brought the stock back below $17, which is roughly where it was trading earlier in the week before Wednesday's breakout. This area, the mid to high $16 range, now becomes a key support zone. If Cipher can hold this level or bounce early next week, it would suggest that buyers are still in control and that this was simply a reset after an overextended rally. On the other hand, if we see heavier volume selling push it below 16.5, that might indicate a deeper consolidation phase before the next leg higher. Either way, the broader uptrend remains intact. The stock is still up significantly month-to-date and continues to trade above all major moving averages. Volume over the past several sessions has been healthy, confirming that there's institutional participation in this move, not just retail speculation. Investors should also keep an eye on Bitcoin and macro headlines heading into next week. If trade tensions ease or risk appetite returns, high beta stocks like Cipher tend to rebound quickly. Conversely, if the headlines worsen, there could be more short-term volatility. But over the longer term, what matters most is execution, and that's something Cipher has been consistently delivering on. As for next week, a few things to watch. First, any commentary or filings related to the Google partnership or warrant structure would be noteworthy. Investors still want more clarity around dilution and timing, though recent strength suggests those concerns are fading. Second, updates on the Barber Lake facility and AI hosting rollout could serve as catalysts, particularly if the company provides more details on client onboarding or revenue visibility. And finally, continued stability in Bitcoin prices should help maintain a supportive backdrop for Cipher's mining operations and balance sheet. From a market psychology standpoint, this kind of pullback is often healthy. It shakes out weaker hands, resets expectations, and allows new buyers to step in at more attractive levels. In that sense, Friday's decline could actually set the stage for the next wave of accumulation, especially if the company delivers more tangible progress on the AI side in the coming weeks. Looking ahead, Cipher's long-term trajectory remains compelling. It's building something that sits right at the intersection of two powerful trends: digital assets and artificial intelligence. The market for compute infrastructure is expanding rapidly, and few companies have the energy efficiency, scalability, and strategic partnerships that Cipher does. So while the stock may have dropped 5 or 6% today, that doesn't change the bigger picture. The fundamentals are strong, the growth narrative is credible, and the company has already shown it can deliver on its promises. Heading into next week, the key will be watching how the market digests this sell-off. If buyers reappear quickly and support holds near current levels, it would confirm that the underlying demand for Cipher shares remains intact. That could set up a potential recovery move back toward $18 or higher as sentiment stabilizes. In short, today's action looks more like a pause than a pivot. Cipher Mining has already shown that it can handle volatility, execute under pressure, and turn opportunity into tangible growth. Friday's pullback doesn't change that. It just reminds us that even the strongest trends take breathers. The fundamentals remain bullish. The partnership with Google provides real-world validation. The mining side of the business continues to generate consistent output. And the AI infrastructure opportunity that Cipher is building toward is bigger than ever. This was a tough day, but in the broader context of Cipher's story, it's just another step in a much longer climb.